There's no way that this is this simple. It can't be. Guys, I think I found one of the easiest, most straightforward, yet one of the best trading strategies you can probably ever come across. No extra BS, no extra indicators. I'm surprised you were able to get such good entries on this. I can't wait to share it with you guys. So let's get right into it. Let me switch screens here and let's talk about it. All right. I know I made a bold claim in the beginning of this video, but just hear me out. All right. This is probably one of the most straightforward yet basic strategies you can ever come across. I've been experimenting with this strategy for a little while now, experimenting with different time frame perspectives, how to take profits. And I think I've found probably one of the best ways to approach using this strategy. And I can't wait to show you guys what this is, why it works, how it works, etc. Now, if you guys aren't familiar with the channel, I have been using this for a while. If you haven't checked out the channel before, or if you're new to the channel, I would invite you guys to check out the live streams that I do, primarily using this strategy. Now, I know this is kind of seeming like this is a breakthrough. It's a little bit misleading, I will say, but I have been using this for a little while now. I would say a good probably year or so. And as this strategy has developed and how I've developed and adapted to using this over the course of that time period, I think I have found a way to make the most out of it. And that's the most important thing using this strategy, is making the most out of all price movements. So if you guys are interested in checking out the channel, I do stream at least twice a week, primarily talking about this strategy and how I view the markets and how I trade the markets using the ABC method, which is what we're going to be talking about here. So I invite you guys to subscribe. I would appreciate it. Hope to see you guys in one of the live streams here soon. But let's get right into it. So what is the ABC method? Okay. ABC method is the best way and easiest way to explain it. Is you're looking for, depending on which direction, right? It's mostly about identifying trends, and we identify trends in groups of 3. Okay. And I'm going to show you guys examples on both sides, on a bearish ABC and a bullish ABC. The bearish ABC is primarily you're looking for an uptrend with a pullback, and then you're looking for a continuation higher. But the most important thing with this strategy is you're looking for a break above the first trend that you drew, or the A wave. Okay. I'm going to identify these trends as waves. Just keep that in mind going forward the rest of this video. But I'm going to do my best to show you guys examples, how to look at these and how to draw these as price develops, and how you can take advantage of these moves. All right. So that is a bearish ABC. And from there, you basically would identify the A. Once the B forms, the next step, and all you're going to do is wait for price to get back above, or the next C wave to get back above the A. And then from there, you're going to be shorting every single time price crosses below the A wave, right? And the goal is to catch a continuation or a reversal to the downside. And the same thing goes for the bullish ABC, right? With the bullish ABC, it's the same idea, just in different directions. The first trend you identify, or the first wave, is going to be the A wave. Then you're looking for a slight pullback and then a continuation downwards. The goal, keep in mind, is to get and look for a C wave that gets passed below the A wave. All right. And once that happens, you're looking to take a long position once price gets back above the A, and you're looking for continuation or reversal to the upside. Now, I'm going to show you guys some examples here in how to set this up, and how to look for trends, identify trends, and how to take positions. Now, before we do that, just keep in mind that this is not financial advice. All right. I'm just some goof on the internet, decided to mess around with trading, did well, and I'm here to show you guys some of the things that I have learned, but this is just for educational and entertainment purposes only. I do not give direct trading advice. I will not tell you exactly where to buy and sell. This is just teaching you guys how you can do it yourself. So as you can see, there's a bunch of lines I have drawn out here, and there's some red ones, some green ones. Primarily this is going to be red ones, as we have been in the bear market over the past year. But I'm going to show you guys different examples of what ABCs are, and how you could taking advantage of price movement and caught possible reversals or continuation. So the best way for me to approach this is from a larger time frame. Firstly, is I'm going to show you guys the bearish side, and I'm going to show you guys how you could have definitely almost caught every single top of the bear market and rode it all the way back down to where we were now. So remember, your primary goal is to identify trends. And if you guys need help doing that, I invite you guys to check out the channel, as well as in the link of the description and the live streams going forward. There is a link to a Discord group. Unfortunately, it is a paid link, a paid group. Just check out the Patreon link in the description. It's going to give you access to the Discord, where I teach you guys how to identify trends, how to look for trends, how to draw trends, and eventually work your way into progressing into learning how to do ABCs. I'm just going to show you guys how I do this. And if you need further help, like I said, please check out the channel and feel free to ask me questions during the live stream. If not, check out the Patreon link in the description if you need further help. So all we're doing is looking for an initial uptrend, a pullback, and a continuation. Once price gets back below the A, you're going to short, or I would short. All right, you set your stop loss appropriately. That's a whole topic for a whole different discussion. And from there, you're just gonna ride the wave down. All right, solid trade. And now what you're going to do, and this goes into the take profit aspect of this. All right, listen, I've experimented with this strategy for a while now. Been experimenting with different take profit methods and different ways to handle and just view or try to make the most out of this. And as of recently, I discovered and have enlightened myself to the idea of trying to capture and take advantage of as much price action as I physically can, or not physically, but as much as I can according to what the chart gives me. So in order for me to do that using this method, all right, we're going to be doing something called playing into continuation, or taking profit at continuation setups, right? And all continuation setups is if you're trading one original idea, in this case is a bearish pattern in a short position, you're going to be looking for similar size, short positions to take continuation plays off of, and allow yourself to take profit and also accumulate, as well as compound the gains that you made from the previous trade. Okay. So in this case, you would have taken profit based off of another continuation setup, which is an A to a B to a C. All right. From there, you would have taken profit, re-entered, and rode the next wave down. Now, it may not seem like it, but if I zoom in here and focus on the trend line specifically, you guys could see that this wick up here where the C wave was, did put in a higher high past the original A that we identified. So that counts as a valid reversal, and we were going to short that. Right? And same thing. Now, this trade was not the best trade when it comes to R&R, because you would have taken it quite soon, because price did come up and form a much larger ABC, which is the next setup we're going to be looking at. A to a B to a C. Okay. From there, you're going to take profit, re-enter once price gets above and then back below the A. And then from there, you're going to take as much advantage of the price move as you can until another continuation setup forms. And like I said, you're just going to hold these trades until you keep finding continuation setups. All right. From there, there's another ABC here. Same thing. Once you identify the C going past the A, as soon as price gets back below, you're going to take profit and you're going to re-enter. As you can see, this position was pretty straightforward. You did not get stopped out depending on your stop loss that you were using. Well, actually, no. Excuse me. I have to adjust this. You would have probably gotten stopped out at least once or twice, depending on the stop loss percentage you were using. And from there, you're just going to be doing the same thing. Look for another bearish ABC. Now, this one's a little bit tricky, a little bit different, because a lot of the times ABCs can form into other ABCs. That might seem like a lot. Let me just explain quick. ABCs, You know, we have an A to a B to a C, which is an A to a B to a C. In this case, this ABC that I highlighted here in the blue actually turns into one larger A. All right, I'm just going to use this green line to identify the larger A. Okay. So if that's the case, we have an A. The B, we did not get a lower low, but we did get its own ABC within the C. All right. A lot of these concepts that I talk about, like ABCs within ABCs, ABCs within C waves, playing into bigger setups. This is all information I go down. I go over and help you guys out with in the live streams as well as the Discord. I'm not going to shill it. If you guys need further help, go ahead, check out the live streams. If not, check out the Patreon link in the description if you need help, or if you want to learn more about the strategy, I'll be more than willing to help. So going into picking apart this structure, all right, I took the ABC within the C. Now you can see that we did take profit and re-entered here. And we did have price did fight in this region for a while. You wouldn't got stopped, I believe, depending on what your stop loss was, a couple times, 2 or 3 times. But now you would be holding it up to about here. Right? And now you do have a much larger ABC in play here. A to a B to a C. Now, this ABC within the B, okay, is a good setup. It's a little bit of a smaller one. I might have to zoom into a different time frame here. If you take this position, we move the one from back here. Did I delete it? I did delete it. Okay. So all you would have done is would have take profit on that position, re-entered here, using an appropriate stop loss. And then you would have held until you found another continuation setup. Now, there's actually was one pretty recent that we did take profit on fairly recently. And from there, we're looking for another bearish continuation in case price does decide to continue lower to some of these lower targets that everyone keeps talking about. So I took profit, and I re-entered here. Now, I did get stopped out once. No worries. I'm just waiting for another entry, and hopefully we can catch another leg to the downside if that's the case. Now, those were great examples of short setups. Now, in a bear market, especially in the extended one that we've been in, you would have absolutely crushed it. The numbers, if you want specifics, I think let's say you used a 2% stop loss, or say 3% stop loss across the board. We're gonna do some math here. I'm gonna try my best to do this. Let's see. Remember, I took profit and re-entered off of the next line, so I'm only calculating the R&R based on where we took profit. Okay. So let's say you had $1,000. Let's say, let's make it a little bit juicy. Let's say 10,000. All right. And let's say you're risking 3% a trade. That's what I'm currently using as of now for the account that I've been working on, about a 3% stop loss with 3% risk. So let's say you have, oh, wrong button. I'm going to bring the calculator out here. We have $10,000. Okay. And then I believe we got stopped out once. So minus $300. All right. 9,700. You would have taken profit at the line here. Right. And that R&R was about a 7.32. So all you're going to do is take you got to figure out what 3% of 9,700 is, which I'm just going to do the math here just to show you guys. It's 291. All right. So now you're going to take 291 and multiply it by the R&R. Right? You would have added $2,130 to your account. Congratulations, you're sitting at about 11K. All right. Now let's take the same metric, the same stop loss, and move it down to the next position that we took. All right. Now, this trade was a one and done where we got a higher high and never got stopped out, and you would have took advantage of that short. The only thing is that the R&R in this one wasn't as good as the other one, but we have to keep in mind the new position size. All right, so now if we take 11,830, multiply that by 0.3, $354. Now the R&R here, as you guys can see that, it's a little small, but it's 3.87. Multiply that by 3.87. We made another $1,300. All right, so let's add 1373 to that. We're just gonna try to round down, to the nearest dollar. So now you'll be sitting at 13,203. Let's move over to the next one. Now this one's a little bit tricky because you got stopped out a good amount of times, a couple times. Adjusted to 3%. Now keep in mind, as price goes down, you can see that the stop loss does fluctuate. So just make sure you're keeping a consistent stop loss in order to get the best results. So you wouldn't got entered once, stopped out, honestly, one time. So let's do the math on that. All right, so 13,203 times 0.03, or sorry, 3%, which is 0.03, 396. Subtract 396 from there, 1207. And so now you're sitting at 1207. You would have taken profit at the next available short setup. Okay. Now, your R&R after that is going to be a 10.37. I hope you guys can see that here. Is there a way to make this bigger? Stability. There you go. Let's make it a little bit bigger. All right. So 10.37. Now you're going to do is calculate the R&R. So in this case, you're going to take that 12,807 times 0.03, 384 times 10.37. All right, so now you would have walked away for just about $4,000. So let's go back to this calculator. Add 3984, $16,000. Congratulations, you're up 60%. All right, so now we're doing the same thing here. We're re-entering off this bearish ABC once price gets past the A and gets back below. We're going to go to a 3%. I'm going to try my best to get it as close as possible. I don't know if I can, though. There you go. As close as I can get. And then we're just going to take profit on the next available setup, which is marked in the red line here. Now, I believe you wouldn't got stopped out, I believe, once. Let's go ahead and just double check. Yeah, I'm going to count that as a stop. So, going back to we showed here before, 16,791. Multiply that point 3%. And you're going to subtract 503 from this number. Minus 503. 16,288. And now what we're going to do is find the new risk and find the new stop. Sorry, yeah, the new amount of risk you'll be using. So you're going to multiply in this calculator 16,288 times 0.03, which is 488.64. We're just going to use 488. And then you're going to multiply that 48 by the risk to reward number here, which is 7.66. That's going to be your overall R&R after you've taken profit, after you've taken the loss. All right, so now you're going to add 37.42 to that number. All right, congratulations. You doubled your money in a bear market. I don't know who else has done that. And to be honest, focusing on the much larger perspective of what's going to be the next thing I want to highlight here is can actually pull this. I don't know too many people that pulled that off. Just my opinion. without crazy indicators on your screen, without going down to a 5-minute time frame. I don't know too many people who have done that. So same thing here. I believe you wouldn't gotten stopped out. Let's see. Once, I believe, twice. Right. So now what we're going to do is find the new calculated risk, 20, 0.30 times 0.03, 600. And then we're going to subtract 600 off of that. And then we're going to find the new number, 19,430. So 19,430 times 0.03, 582. Subtract 582 from that, 1848, because you got stopped out twice. So, and then what you're going to do is find the R&R based on the number after the net losses that you have taken. 565. You're going to multiply that by the R&R, which is 4.25, because that's where you would have taken profit here. Your R&R is going to be at 4.25, 2,403. So now we go back, add 2,403. So now you're still sitting positive from before, because we were just slightly above 20K. So now go back down to here, set a reasonable stop loss. We're going to be using 3% to stay consistent. And then we took a profit off of this setup here. And you wouldn't have gotten stopped out at all. Now we're going to take that number, figure out the new risk. 21,251. 637. Multiply that by 6.73. Add that to the new total. 25,541. All right. So right now, as of, if you started this bear market with 10 grand, you would be sitting at about 25K right now, using the appropriate risk, using the appropriate setups, using the appropriate stop loss percentages. Everything was consistent across the board. That's just if you take in shorts. Now, sometimes you could play smaller setups in between. As you can see, there's some green lines here. I'm going to show you guys what that looks like on a smaller time frame or smaller perspective. And I'm going to talk about that after showing you guys the examples. Long story short, you definitely could have played both sides as well. You have a bullish ABC here. Now, I would use a smaller time frame and give you a little bit more price action, but the candles don't go back that far, unfortunately. But you would take an entry here once price got below and then got back above. As you can see, the wick there, price got below and came back above. And as well as you could have taken profit, re-entered one more time. I think you would have gotten... All right, there's one more here you would have taken. But after that, there was really no good setups. But unfortunately, you wouldn't have had trouble around here. I did play this, but back then I was playing it differently, so I can't directly tie the results of how you would have done, because primarily I just would have been playing shorts using the method I'm using now. Now remember, guys, I'm primarily using the continuation method. Continuation method is basically you're following the bigger trend and just taking advantage of pullbacks and looking for further downside. Or in a bull market, you're going to be looking for further upswings. Now, this goes into real-time examples. Let me just highlight something for you guys quick. Now, we do have a bullish ABC. We have a low, a downtrend, a pullback, and then a lower low here. So that means you'd be taking a long position as long as BTC and the price is above the A. All right. We came back down below, came back above. I did get entered. I'm currently holding that position. I'll be more than willing to show you guys here. But while Bybit is loading up, I will show you the entries I have currently at the moment. Um, we are working on a smaller account. For those who don't know, we started with 500 bucks. I got that up to about 2K, and now we're slowly dancing around that 500 back to $1,000 range. Pretty, that fluctuates a lot. That's what comes with the territory, but I'm looking forward to using this new method of continuation and playing into the much larger trends. And guys, I'm fairly confident that we'll be doing well, even if we continue into the bull run, or sorry, if we continue into the bear market, or if we do go into a bull run. I'm playing both sides, looking to take advantage of both. As you guys can see here, I'm going to go ahead and enhance this. My entry price for the BTC long, which is the setup I just showed you, is at about 15,473. All right. That's all for this setup here. I pretty much got in almost exactly the wick above. So I'm planning on holding that in how we can take advantage of a potential bull market. Not saying that this is a bottom here, but just for example purposes. All you're going to be doing on the opposite side, just like I showed you for the last, 15, 20 minutes on bearish sides, you'll be doing the same thing. You'll be waiting for price to develop. All right, just an example, just something like that. I'll make it simple. All right, what you're doing is once you get another bullish ABC that shows possible continuation of the uptrend, all right, something like that, you're going to take a long position off of a ABC bullish setup that forms on a downtrend, and you're basically going to take continuation. So I have a long position, as you can see, as I showed you here on Bybit. And what I'm going to do is I'm going to take profit on this position. I am currently using a 3% risk. So, all right. And I'm going to take profit and re-enter here. All right. And that basically guarantees you some money that you walked away with, regardless of what price does, just in case that further upside does not happen. I go over a bunch of tutorials. I go a bunch of reasons, and I explain it more on why I like using this method. The video is available in the Discord. Like I said, I'm just gonna show that probably one last time, if not one more time. Just check out the Patreon link if you guys are interested in learning this method. But guys, this is good stuff, man. This is seriously some good stuff. I've traded a lot of things back in the days, basic support and resistance, using RSI strategy, which is, I do still like that to an extent. That evolved into Elliott Wave, and I was an okay Elliott Wave trader, and now that turned into this, and I absolutely love this method, guys. If you guys are going to do this, keep in mind, please do not go to a 5-minute time frame and do this. Go to a 30-minute at the very lowest, to a 1 to 2 hour. It's like a sweet spot. Make sure that you are zoomed out. You take your mouse and you zoom out as far as you can. All right. I can't zoom out anymore. Make sure that you keep an open, wide perspective of the larger price moves, and that's going to tell you the bigger setups that are most important. So, as you can tell by how we calculated things, you would have absolutely killed it in the bear market just taking shorts. I hope to make even more money on the bull run if it does whenever it decides to happen. But guys, if you guys are interested in learning this, please feel free to check out the channel. I absolutely love this method. This is the bread and butter of what I've been doing over the past year, and I couldn't be any more happy with how it's turned out. And I'm so excited to share this with you guys and hopefully help you guys out along the way. So check out the channel. I would appreciate it. If you guys are further interested, like I said, check out the Patreon link, which is going to be in the description of this video, as well as feel free to tune into the live streams, which I stream twice a week. Be on the lookout on that, subscribe, and also hit the notify me button or the bell to know when I am currently going live. Keep an eye out on around 2 to 3 o'clock Eastern Standard Time. That's usually the time I like to get on. And I'll usually be on for like an hour to 2 hours, and we'll just talk TA, talk trading, general. So I hope to see you guys there. If not, no worries. I would appreciate the like if you guys do like this video and you want to see more content like this, where I go over this strategy as well as previous strategies, and I'll be open to trying new things out as well. So we'll have to see how this goes, but this is the beginning of something that I like to talk about. Hopefully, I can show you guys how to do in the future and help you guys make money. So, thank you guys so much. I appreciate you. Like, comment, subscribe. If you haven't, I would appreciate it. Until then, I'll see you guys soon.